Part 3 of the question is to present and disclose current tax, deferred tax, PP&E, and leases. Now, the first two parts of the disclosure, you're going to pick your numbers straight from mostly part 2 of the question, so it should be easy. Where you're earning the marks in part 3.1 and 3.2 is for your method marks and your presentation and disclosure. So format has to be perfect. Even if your numbers are wrong, it doesn't matter. If you correctly used your numbers in the right place, you're going to get the benefit of the marks. Also, for the tax note, remember your tax reconciliation. You're reconciling standard tax to effective tax, and standard tax is just PBT times the tax rate. If you did the tax column in part 2 of the question, then your exempt differences and the tax effect thereof, you can just pull through into your note. So 3.1 and 3.2 should be straightforward, straight from part 2 of the question. 3.3 is the PP&E note. Now, this part is reasonably straightforward in this question. Remember, this is often not the easy part of a question, but in this question it particularly is because not much happened on the PP&E. The only challenge was the revaluation of the land and buildings, which are then transferred to IP, but those calculations you can do in part 2 of the question. So it's just a case of picking up the numbers and popping them through. And then the third asset that you will have is plant machinery, on which there were no movements other than depreciation in the current year. So the PP&E note should be very easy, probably 6 or 7 marks at the end of the day. It's really not difficult. The last part of the disclosure is the leases note. Now, for leases, this note is quite new to you, so you're probably not that familiar with it yet. And actually the note is long. There's about 7 or 8 sections to it. But you've only been required to do some of the sections to it. You won't be asked to do the balance of the sections. So make sure you know exactly which sections you have to do. So the sections are the right of use asset, because they chose to disclose it separately. The lease liability note, which is basically a reconciliation of the movements, the opening and closing balances, and the split between current and non-current. There is then the maturity analysis, which focuses on the future lease payments. And lastly, there is the cash flow movement of the lease, which is any cash flows in the current year that will be disclosed in the statement of cash flows. And that needs to be split between operating and finance cash flows. And that will then finish a lower limited, the question. It's so important is your format. My suggestion is write down your basic format straight away, and then you can just throw the numbers in. So it's always SA, normal tax, current, and in this instance we have an under provision for previous year, and then deferred tax. And your deferred tax has got movement in temporary differences, and it's got the utilization of the tax loss. Both of those must be shown separately. And it's easier to just write them all down first, because you can just go and quickly pull the numbers from where else you've got. And remember, a lot of what you're getting here is marks for format and then method marks. So if your answers are right or wrong here, it doesn't matter. What is important is how you set it out and the fact that you're using the right numbers in the right place. So our current tax from part 2 of the question was 89774. Sorry, that didn't write very well. Let me just rewrite that. 89774, and our under provision was given in the question 64210. So both of those two together make up our SA normal tax for the current year, 153984. Our deferred tax we also take from part 2 of the question, the temporary differences 14090. Now, I must just warn you, I've got a rounding difference somewhere in my answer. So in part 2 of the question, it came to 14091, but I know I've got a rounding difference, so I'm just using 14090. They're not going to penalise you for 1 mark. And then our tax loss we calculated already, 42,000 as well. Remember, your movement in temporary differences was deductible temporary differences, and therefore they are subtracted from your current tax, because it'll be a credit to tax expense and a debit to the deferred tax asset. So deductible temporary differences are always a credit. In other words, our total deferred tax for the current year comes to 27,910, and you can add your tax up, and it comes to 181,894. And that's the disclosure of the tax done, but remember, there's still the tax reconciliation. So that's what we're going to do now, which is still part of this required. So the tax reconciliation, again, format is what you're being marked for here. So remember, it always starts with your accounting profit. So in our instance, what we calculated in part 1 of the question, 1072,750, and that's likely to be half a method mark. So whatever your figure was, put it in. Then you calculate standard tax, which is always 28% of whatever you calculated above. So again, a method mark, 28% of 1072,750, which comes to 300,370. And you actually don't even need to calculate that because you've already done it in part 2 of the question by having that extra column for tax. So you can actually just pull the figure through. And now you list your reconciling items. Start with your exempt differences. And it is just a case of going to part 2 of the required and pulling through your four exempt differences. So dividends, penalties, and interest, donations, and fair value adjustments. And this is really marks for jam because it's so easy. Again, no abbreviating. You don't even need to do any calculations because you've got all the figures in part 2 of the question. So you just pull them through exactly as is. 189,840 with a bracket because it was income, 9954 and 1120, both added back because they were expenses, and the fair value adjustments 3920 also subtracted because it was income. And then you need to think about any other items in the question that will cause tax not to be 28%. It's going to be things like differences in foreign tax rates, which we don't have in this question, rate adjustments, which we don't have in this question, but what we do have in this question is the prior year under provision. And remember what I said at the beginning, the under provision is part of this year's tax, but of course it's not part of matching, and therefore it is a reconciling item. So your under provision goes in, again you know the figure, so you don't even need to think about it, 64,210. And if you've done everything correctly, it should add up to 181,894. Now, in an exam, unless you're sitting there with time on your hands, don't even bother to add it up. You know what the figure should be. The figure should be the 181,894 that you calculated up above. So really, in an exam, don't waste time adding it up. Just put the figure in, because that proves that you knew that the two were supposed to match up. The chances of your examiner sitting checking to see if your figures add up or not is remote. He's not going to do that. And in any event, if one of the figures is wrong, he knows you've got an error. So just put the figure in so that they know that you know it's meant to reconcile. It just doesn't at the end of the day. And that is the income tax expense note. A lot of the marks, in fact nearly all of the marks, are method marks, probably half a mark for each item. So this note is probably only 6 or 7 marks at the end of the day, but it is 6 or 7 easy marks if your presentation and format is good. Right, that's the end of this note. The next note we'll be moving on to is the deferred tax note.